Did you or anyone you know accept forbearance on their mortgage and receive a letter like this recently? If so, you're going to want to watch this. Hi, I'm Mark Stiles of Stiles Law down here at Studio B. This is extremely important. Now, I'm aware that this may not apply to you, but it may apply to somebody you know, a neighbor, a friend, a family member, someone who accepted forbearance during the COVID crisis, and now their mortgage servicer is giving them very few options. Thomas, let's rewind the calendar back to April 2020. Remember? COVID. Chaos. Congress was debating over the CARES Act. Part of the CARES Act was this forbearance opportunity, the ability for homeowners to defer their mortgage payments. Payment relief, if you will. Until things settle down, they might need the payment relief. Back then, many of you received phone calls from your mortgage servicer. Do you want to delay your mortgage payment? Many millions of you said, yes, I could use the payment relief. Thank you. But yet there was nothing else to do. It was a verbal acknowledgement. No documents were signed. In fact, if you recall, we did a video specifically setting out the difference between forgiveness and forbearance. Because it was so loose, fast-moving, and chaotic, we were concerned that many Americans who accepted the forbearance would think it was actually forgiven, that those payments were not going to be due, but they were only going to be removed. Fast forward to today. There is no foreclosure moratorium anymore, and most servicers are reaching out to the consumers saying, no more forbearance either. Time to pay up. Now here's where it gets really tricky. Most consumers, the borrower, who accepted the forbearance were under the belief that while they delay this payment, they can add it to the end of their loan. What do I mean by that? They're not going to be required to pay it in one lump sum. They can move that amount to the end of the loan to be paid when they sell the home or when they refinance that loan. And in most cases, that is accurate. But like most things, it depends. Who is your mortgage servicer? What type of loan do you have? Is your loan backed by the U.S. government? Is it a Fannie Mae loan, Freddie Mac loan, FHA loan, VA loan, or USDA loan? If it's one of those, then you absolutely, unequivocally have the right to move that amount to the end of the loan. But not all loans are federally backed, and each servicer can make the decisions that they want to. Remember that letter I showed you in the beginning? Well, that letter was brought to me by a client. They received this notification now that the moratorium is over, and although that client has a VA loan, that mortgage servicer only gave them 3 options. Pay us all of the forbearance amount in one lump sum next month, modify your loan, taking those 12 months and building them into the mortgage payments, adding a substantial amount to each payment going forward, or sell your house. The one option that they didn't write in the letter is, or else we'll foreclose on you and take your home and all of the equity with it. Now let that settle in for a second. Our veteran who chose to accept forbearance is now being asked to either pay it in full, add it to a mortgage payment that is going to make it extremely challenging, or sell your home, or be foreclosed. A veteran. So that veteran received the letter and made the phone call. You would think that the service provider would have said, oh, okay, we made a mistake, but they didn't. They treated him like a deadbeat, a non-paying deadbeat. Pay us now. Had he accepted that, he would have accepted the fact that he was going to get foreclosed on, but he didn't remain quiet. So here's what's happening, folks. Let's go back to that initial phone call back in 2020. Mortgage company calling borrower. Hi, borrower, this is mortgage servicer. Under the circumstances with COVID, we understand that there are hardships. Would you like to delay making your mortgage payments? Sure, says the borrower. Great. Consider it done. No documents, no agreements. Now think about this from the mortgage servicer's perspective. This was all thrust upon them. They're being told to let people delay their payment, but they're not even creating any documentation around it. It's an agreement verbally to delay payment. So how do they book it? They go back to their offices and they say, what do we do now? Well, let's put them in pre-foreclosure. Great idea. Let's put them in pre-foreclosure. Fast forward, all of the foreclosure moratoriums are over. So now these pre-foreclosure files are ready to move to the next step, the foreclosure department. Can you see how mistakes can be made? Can you see how unethical behaviors can be created? Here's my mission. If you or anyone you know accepted forbearance and is struggling to have a relationship with their mortgage servicer because their mortgage servicer is being rigid and potentially unethical, they can reach me on my Calendly link at any time to strategize and work through this situation at calendly.com/mstiles. Now, here in Massachusetts and any other state in our fine union, you can find out more information through the CFPB, the Consumer Finance Protection Bureau. And Thomas is going to put their link right down here, Consumerfinance.gov. Go to that website, find out who to speak to make sure that your mortgage servicer is doing the best for you. Because taking no action or accepting their word is not a good strategy. Folks, please share this with everyone and anyone. And remember to subscribe to our YouTube channel right here at Stiles Law. And if you're ever working with a mortgage, tax, financial, real estate, or insurance professional, and the topic of legal services comes up, please ask if you can work with the team at Stiles Law. We'd be honored to help. Thank you and be well.